We're going to start with the first one of QL. Now, for QL has been highlighted earlier on the 2nd April. The stock has been gaining about 12.5%, hitting the high of 6 ringgit and 60 6 ringgit 65 cent, which is slightly below our second target of 6 ringgit and 69 cent. The stock has peaked right within on 20 May, and the subsequent correction saw the stock is pretty much built a new baseline and higher low structure above this red line here, represented by 88-day moving average. So in a nutshell, the recent correction has pretty much ended following what we call the emergence of the fresh buying interest within the current support level. So in terms of the overall trend structure is still pretty much on uptrend, and we believe the gain or the rebound over the past 2 days has pretty much ended the recent correction and kickstarting a new so-called up cycle. We've seen a breakout move above the 13-day moving average, turning the short-term buy back into the bullish, but still traded below the 33-day moving average, suggesting medium-term trend structure yet to change, which I think as for now remain neutral. But regardless, if you look on the screen, there are a little bit what we call that significant reading in terms of the how the RSI has been panned out. You are seeing although slightly slanted, but there is actually so-called something that we call a hidden bullish divergence. You are seeing a new high-low structure in RSI, but a lower low structure in the stock price. Now, the hidden bullish divergence is if the normal divergence you are using for the something that we call potential reversal, hidden bullish divergence often has been indicated as a continuation kind of the signal. Hence, hence we believe the ongoing uptrend, which is start much more earlier, is expected to continue. So we actually reiterate our technical buy with the new and higher target at 6 ringgit and 80 cent, and the next target at 7 ringgit 40 cent, representing a decent risk to ratio of 1 to 3, which means you are risking about 5% downside risk at 6 ringgit and 10 cent, and 15% upside potential. So in all, we think the stock is looking good and expected to continue to, moving up, continue the uptrend in the near term. All right, that's the first one. For the quant style, we are using same. I think it's similar with what we used before. It's a low volatility quant style with the scoring high at 9, which means if the market on the pullback, in general sense, the low volatility quant scoring often highlight which is the stock have a lower beta, which is has a low correlation with the domestic sentiment. Hence the reason why we choose to start with this current sentiment, which a little bit on the weaker side. Now the second stock will be a Magnetech. Magnetech has been highlighted in Traders Almanac before, way back. I think in 6th February, the stock has gained significantly, about 27.6%, surging past our second resistance. Now, what make interesting is how the stock is actually creating a new high structure, and of course, is actually a new all-time high, which is actually right within at 2 ringgit and 40 cent region. Now, the solid breakout move on 13 June has pretty much give so-called kickstarting a new and major upcycle. As you can tell, for the past few days, the consolidation has ended. We've seen a buying interest emerge again as per yesterday. The what make interesting is if you look on the trend of the RSI, how the recent downtrend moves has been change toward the uptrend. So we've seen a breakout move in RSI, suggesting the momentum is actually improving and set to kickstart a new upcycle. So we're expecting the stock to continue to trade higher as we revise our stop loss higher at 2 ringgit 22 cent, and the net resistance will be at 2 ringgit 50 cent and 2 ringgit 75 cent. Risk to reward ratio is quite interesting at 1 to 2.8, which means 5.9% downside risk against 16.5% upside potential. There's no quant scoring for Magnetech industry. Last but not least will be Betamax. So one of the reason why we like the stock, which is actually trading pretty much on the downtrend. I think since March last year, but eventually this downtrend move has been, has shifted upward following a breakout above the red line here, represented by 88-day moving average, and you can tell there's a solid breakout followed by a classic return move as the stock bounces off the prior resistance and support level. So this is considered a new trend has begun to unfold. Yesterday again, on the back of improving trading volume, momentum is actually improving. We've seen an uptick, fresh uptick in RSI, D-trend in positive territory. So we're expecting the stock uptrend to accelerate further, with the next resistance is actually paid at 47.5 cents and 54.5 cents, while the colors will be below 38 cents, which means in terms of risk ratio is 1 to 2.6, 10% downside risk against 28% upside potential. There's no quant scoring for the stock either. What do you think?